Welcome and thank you for joining us. In today's short video, we're going to review some of the updates to the Dr. Jumbo Loan Program. These programs do permit up to 100% financing for eligible medical professionals. If you're a buyer and you have questions, please call us 7 days a week or visit us at jumbomortgagesource.com. Okay, so first we want to establish exactly what is a jumbo loan. Of course, a jumbo loan is any mortgage amount that exceeds the conforming loan limits. Currently, the conforming loan limits in most locations throughout the U.S. is $832,750 for a regular one-unit property. In some high-cost locations, these loan limits can go as high as 1,249,125. And high cost locations, of course, being more expensive housing locations, which we'll look at here in the map. So this is an overall view of the high cost and regular locations. Everything in the gray, that's your normal $832,750. Again, that's the base conforming or conventional loan limit for a one unit property. And then all the colored areas in the map, those are in between there and $1.249 million. Some locations are kind of in between, like in Colorado, maybe in Utah, but you can see many areas in like coastal California, LA, Orange County, San Francisco, they go up to the 1.249 million, and some areas around DC, of course, and in the Northeast. So this is kind of a basic view of your regular and high cost locations. Okay, so any amount, again, that exceeds this would be classified as a jumbo loan. Okay, so for the Dr. Jumbo loan limits, basically 100% financing now is available for qualified buyers up to $2 million loan amounts. It will require a 740 credit score for that. Lower credit scores down to a 680. There's also 100% financing available up to $1.5 million loan amounts. And then 95% financing is also available up to $2 million loan amounts with buyers that have a little bit lower credit score of the 680 or above. Even higher loan options are available with a greater 10%, 20% down payment. Of course, as the down payment increases, the loan amount limits generally increase as well. But yes, 100% financing up to $2 million for well-qualified medical professionals. This is a great program and a way to significantly reduce your cash to close. So we're going to go over just some of the details and highlight the program just real quickly. This program, of course, is like really any standard mortgage where the documentation, it's going to be a full documentation loan with complete income and asset documentation, last 2 years of tax returns and W-2s. Most recent 3 months of bank statements and things like that. For recent college graduates, though, that are just starting in the field, obviously they can't meet the 2-year requirement for tax returns or W-2s. So yes, in many cases they're exempt from that, again, once they start in the field. But for the property types, this is for primary residence, owner-occupied homes only, and it does include just your basic single-family homes, townhomes, and approved condominiums. The investment properties, second homes, vacation homes, they're not permitted under this program. Again, just primary residences. Transaction types, it's only for purchase transactions, and the available terms are really all your common adjustable rate mortgages. 5-year, 7-year ARMs, and then of course your common fixed rate options, 30-year, 15-year fixed options, and these are all fully amortized with principal and interest. Okay, and again, this program is limited to just licensed medical professionals, as seen here, all your MDs, doctors, and so on. Okay, just some continuance here, some more details. The debt to income ratio limits of the program are generally 45% when you're financing up to 100%. So that's important to keep in mind. Also, one big benefit to the program is that student loan payments. These are excluded from the borrower's debt to income ratios if they're deferred in forbearance or reporting zero payment on the credit report. As we know, most medical professionals have significant student loan debt, and this can definitely be an obstacle when trying to qualify when it comes to debt to income ratios. So, yes, if your student loans, they are excluded from the debt to income ratios if they meet those requirements. Okay, also, projected income is going to be used if your starting date is within 150 days of the note. So that's also important to remember. These programs do require mortgage payment reserves. Just like any other, really any other jumbo loan and many conventional loans for that matter. Basically, mortgage payment reserves are your mortgage payment, principal, interest, taxes, and insurance. And then how many of those, whatever that equals, how many months is going to be needed depends on really how much you're financing, what your down payment is. But for the maximum amount, 2 million dollar loan amounts with 100% financing. Generally, 6 months of mortgage payment reserves want to be documented. And this can be liquid or non-liquid accounts. Non-liquid accounts can satisfy reserve requirements as well. 401ks, IRA accounts, things like that. It goes down, of course, the lower your loan amount is. So maybe 3 months reserves will be required for lower loan amounts of up to 1.5, and then in some cases no reserves for buyers that are putting 5 or 10% for a down payment. So again, reserves are greatly depending on the loan amount and the down payment. That's a basic rundown of all the requirements. Again, if you're a home buyer and you have questions, reach out to us 7 days a week by calling or visit us at jumbomortgagesource.com. Thank you.